We just got notification that one of our offer in compromise got accepted with the IRS. Client is saving over $26,000 with the IRS. My name is Sergio Melendez. I am an IRS enrolled agent and tax expert, and today I will be discussing the breakdown of how we saved our client over $26,000. Our client just saved over $26,000. We represented the client here at Semper Tax Relief all the way from A to Z and guided this client. So for this case study, we're gonna give the client a name. Her name is Bond, Jamie Bond. I am gonna modify certain facts just for client confidentiality, but the entire concept is what really occurred. We basically could break this down into 5 steps of getting the offer in compromise accepted. Step 1 is a pre-resolution checklist, almost to make sure that offer in compromise is the right solution, but if not, we calculate something else. Step 2 is calculating the offer. Step 3 is making the offer. Step 4 is presentation when you submit the offer. And the last step, step number 5, is the final negotiations with the IRS. So step 1 is the pre-resolution checklist. Pre-resolution is the foundation of anything else. The pre-resolution checklist is the combination steps of number 1, make sure that all taxes are filed up to the current tax year. Second, that there's a correction in case the client keeps filing and they owe money, they file and they owe money, that correction is made upon their paycheck through work. If they're self-employed, now here's where somebody needs to start making estimated tax payments and also doing a little bit of tax planning. One of the secret key things to this is what's known as the statute expiration date. This is when the IRS only has 10 years to collect the balance. That's right. So what happens after the 10 years, like 10 years and 1 day, that 1 day afterwards, the IRS writes off the balance down to 0, no matter what it is. Somebody could owe $1 million or $1,000. If it is the 10 years are up, that means the IRS has no longer a right to collect and it's down to 0. Why does this hold a key piece? Because let's say that the entire expiration date is only next year, then offer in compromise may not make sense. Under those circumstances, we might put under non-collectible or under a hardship payment plan, where it would be in that status up until the statute date, where the statute date would become 0. But if somebody has quite a ways to go, then that means that it's worthwhile to at least attempt the offer in compromise. And the very last step is make sure that the client has all her personal income organized and her monthly expenses, because we're going to use those numbers to calculate the offer. So once the pre-resolution checklist is completed and thoroughly reviewed, and including educating the client on tax planning, then we move forward and we calculate the resolution. We look at the income and expenses on the organizer, and we go ahead and just start calculating what are the possible resolutions for somebody. So the number 1 thing that we're going to take a look at is just income. What are the sources of income? Is it wages? Is it self-employed income? Do you sometimes rent out your rooms and get Airbnb? Do you have a ride share application that you're driving for? Uber Eats, Uber, Lyft. Do you sometimes own a business where you get a Schedule K1 from an S Corp, an LLC? We have to now calculate on a monthly basis how much income you are bringing home. Now, if you are an Uber driver or Lyft driver, we calculate what's the net business income. For example, if you're earning $1,000 a month driving for Uber, then we have to deduct how much in gas are you spending, or based on mileage, what some of your expenses might be, oil changes, do you provide supplies for your ride share people? And if so, then we get a net business income. So if your gross is $1,000, but you're only netting $250 on this offer in compromise, we're only gonna put the monthly amount of $250. On a different page, we disclose both the gross of $1,000 per month and your monthly expenses. So just to calculate how much is it per net per month that you're bringing home. The other part is we're gonna take a look at what's the reasonable living expenses. For certain items, the IRS gives you a maximum number. If you exceed the maximum number, you're supposed to have some kind of explanation where it might be allowed. These are known as the collection standards. Some of them are given to you that you use automatically. Others is what actually you spend on. So there is no number. So these expenses are for food, clothing, miscellaneous, housing and utilities, how much you pay for your car payment, What are the vehicle operations, like gas, maintenance, tire changes, oil changes, stuff like that. Others is for health insurance, out-of-pocket healthcare cost. So the calculation is, what is your monthly income minus your reasonable living expenses, and whatever is net, then we use that to calculate the offer as one of the parts. The second part is we have to take a look at the assets. So here, particularly looking at this specific client, the total amount of gross is $38.22 with 50 cents. After all expenses are $37.60. It is a net monthly disposable income of $62.50. To calculate the offer, we multiply this by 12 and it gives us $750. Now we're going to take a look at assets. Assets are any type of cars, any type of houses, boats, airplanes, stocks, bonds, mutual funds, checking accounts. So looking at all the assets of this client, she has a 2018 Honda Accord. It's worth $18,721, but there's a loan against it still owing $21,000. So it brings it down to just a zero equity. We never, if it's negative, we never include any type of negative. We have to bring that number up to zero. No other assets. Money in the bank account, it meets the minimal exclusion. Basically, if it's $1,000 or less, we exclude that amount. So this client has no assets whatsoever. Now we have an offer in compromise calculated. This entire form is known as a 433A O.I.C, and this is used to calculate the offer in compromise. Make the offer, now we gotta tell the IRS, we're gonna offer you $750. This form is called the Form 656. So on the 656, we indicate the type of tax this client owes for personal income tax and only owes for 1 year. Now, remember from pre-resolution that we verify what tax year they owe on. That's where we use now the information on the 656. So the client, she owed for tax year 2013, and this is for personal income tax. Personal income tax code name is 1040 with the IRS. So we fill that out on the 656. IR Form 656 is making the offer. So we put down $750, and the way we engineer it is to put 20% down and then pay an application fee of $205. Those are the current prices as of right now, August 2020. Mind you, last year we submitted it when the pricing was still $186 application fee, and it was still just 20% down. We also indicated if this offer gets accepted, the difference would be paid in 5 months. That's right. So there are 2 checks to be written. One check in the amount of 20% of the $750, and the second check to be written in the amount of $205. One represents 20% of the entire offer amount, and the other represents the application fee. Brings us to step number 4, which is putting the packet together. This step is very crucial. You want to make sure that this packet is nicely organized, ready to be submitted, and you want to make the job easier of the IRS agent. Why? Remember, IRS are government agents. They don't give a crap about you. They don't. And if you can make a bureaucratic, lazy person's life easier, it's gonna maybe grant you an acceptance on this offer in compromise. Mind you, look at all this work you did to put all this stuff together. So this extra energy, this extra might be enough to get you accepted. If you look at two piles of paper, where one could be expertly calculated, everything right on the money, but it's missing that organization. The IRS agent might be looking for information that they may need, and they have to hunt for that information. They can't find it. They'll say, I can't find it, I'm just gonna reject. Versus if you have a very nice presentation, if it's nicely organized, the grammar might be off, the calculation might be a little off. The agent is not gonna dig for information. It's all gonna be laid out for them. The work is gonna be done for them. They might say, well, a couple minor mistakes, I'm just gonna overlook that and say, grant you accepted. That's why this part is very important. Here are my steps. I type out a very basic cover letter, letting them know I'm representing the client, power of attorney. The power of attorney is enclosed based upon that calculation on a 433 O.I.C. They have nominal income and assets, not enough to nowhere near pay the balance of how much is owed. That the offer in compromise will make sense on both government and the taxpayer. Then I write enclosures. I write a list of everything I'm submitting in that order. So one of the first things I write is power of attorney. That grants me the full authority to fully communicate on behalf of a client. The second thing I do is I have a cover sheet with the checks, the 2 checks, one for the 20%, the other for the application fee. The third, I put down 433A OIC. The second is a 656, and then any other type of supporting documents. The type of supporting documents you should submit is everything that proves whatever you listed on the 433A. So if you work, should be at least 3 months of pay stubs. Should be 3 months of bank statements. If you're self-employed, it requires 6 months worth of stuff, including maybe a profit and loss or how you calculated your monthly income. Also, anything else, if you're paying the delinquent state taxes and that's part of your expenses that you're including on there, then include the supporting statement that shows the proof of those monthly payments that you are including. And that's it. So I always use bright color orange. You could use bright color anything. These cover sheets, you could get them from the 99-cent store, Walmart, Target, Staples, anywhere. Or worst case scenario, maybe you run it through your printer with, like everything black and the letters white. Something to kind of show that there's a difference between what the different information that's being submitted with the offer in compromise. Because keep in mind, these packages could be fairly thick, so you don't want the IRS agent digging all over the place for the information. So spend the extra time on putting this together when you throw in the mail. So step number 5, I'm gonna just clump up into a couple steps. So with COVID-19 and creating a lot of delays, a lot of the IRS departments, they were just completely shut down and completely dark, and we were kind of left second guessing what's occurring with the IRS. They always go through shutdowns at the end of the year in December to just update systems. So we're kind of used to shutdowns. There's also a historic shutdown a couple years back. So this fell under very similar circumstances. Number one is IRS recognizes when you submit something through the Postal Service, and that's as of the date that was mailed out. So COVID-19 created a lot of delays, and typically this is the time frame when you submit an offer in compromise. Submitting an offer in compromise, the IRS responds about 30 days later stating, we received the offer in compromise. They give your offer in compromise an O.I.C number, your offer number. That way, if you ever call in, you have that to reference, in addition to your social security number. So 30 days. That letter also states when they're gonna assign an agent. An agent always gets assigned to your case. They review your entire 433A, your 656, make sure that you're all filed up, do all that, so on and so forth. So that letter, the typical time frame is about 5 to 7 months when that agent will get assigned to your case when you receive this letter. Now with COVID-19, the delays right now are approximately 90 days, 90-day delay. So if you submitted an offer in compromise, more than likely that response will not come in 30 days. It might come within about 30 to 120 days. So you're looking between 1 to 4 months before a response gets sent back. Now, when they send a response back right now with the delay, it could be anywhere between a 4-month to 8-month assignment on an offer examiner or an IRS agent to review all your items. So when the agent gets assigned, one of the things that they're gonna look at is they're gonna thoroughly review your 433A OIC 656. They're also gonna do some internal investigating. They're gonna check for just maybe assets recorded with the county, assets recorded with the state, and just review that everything matches up. If everything matches up, then great. Maybe they wanna send a confirmation of maybe an additional pay stub, maybe an updated bank statement, or if they see something kind of quirky, they would want some kind of explanation to that. If you have any type of assets, they would want to make sure that confirmation that the loan is against that asset or you cannot borrow from it before it goes on to the next step. So the time frame that we're looking for this particular client, we met her in October of 2019, and by November 7th of 2019, we submitted this offer in compromise. In December, we received confirmation and we got a letter stating that we're going to be contacted on or before March of 2020 regarding this offer in compromise. But of course, we know what happened in March. In March, this entire country shut down. From local to national, state level, we were just shut down, including the IRS. So the IRS gave us a letter in the mail stating that there's a 90-day delay. Of course, March came and went, and we got this letter in April. In April, we got a letter saying that there's a 90-day delay in this case, that there's gonna be no new assignment, just look out in the mail and just stand by. And that's typical. Well, one of the good things is when you submit an offer in compromise, there is an immediate hold. The offer in compromise unit codes all other departments of the IRS that there is an offer in compromise pending. That means that there's no collection activity at all whatsoever. The one thing is, if tax time does come, you are supposed to file your taxes on time with no new taxes. If you file your tax return and you have a balance due, make sure that that has to be paid off before tax time, before the deadline. If not, the entire offer in compromise will be returned or rejected because there's a new balance that's not included in the offer in compromise. With this client. So we got notification of a 90-day delay, but we got a call from an agent in May. In May, the agent, she called from the Brookhaven campus, gave me a call, said, "Hey Sergio, I'm on the case for your client. Let's go ahead and review this." We said, "Great." Now the client had a couple changes. One is he was unemployed for a little bit because of the shutdown. She didn't go back to that employer, had a different job. So almost we had to recalculate the entire offer in compromise fresh when this agent came on board. So she requested just 1 month of bank statement and the most recent pay stub. And we got lucky. Things still matched up. So it matched up to the point that this agent kind of went dark. And we figured, I called the agent, left a voicemail saying, "Hey, is this a response?" And I'm thorough about that. Whenever I submit information, I want to make sure that they received it. And also if they have any other questions or concerns that needs to be addressed. So we submitted the additional information in May to the IRS agent. There was no response from her. We called back again in June. There was no response from her. And then in July, she called back and stated, okay, well, her legal department, which is true, IRS agents, they make a request and it goes to their legal department. Their legal department wanted to make sure what the income was like because a pay stub for May was so fresh because of COVID. Hours could have been limited. So the agent says, you know what, send me the 2 most recent pay stubs as of July and then the 2 most recent bank statements. So we did that. We submitted it to the IRS agent. And then the IRS agent went dark, went blank. I called and follow up. There was no follow up until what we received today on August 24th, 2020 was the official offer in compromise acceptance letter, which means that, hey, this client walked away from the entire balance. That's right, over $26,000 in savings. So once the offer in compromise gets accepted, the couple things to keep in mind is, number one is you only pay 20% of the original offer. So right now, the way we constructed is that the rest of the 80% of the offer, which the original amount was for $750, that means there's a difference of $600 that needs to get paid. That's 80% of the rest of the offer. So offer in compromises completely eliminates the balance. It completely settles out any back taxes. It's a great program that you have to qualify for. You got to be thorough. You have to be organized, and it could be very much possible. And so those were the steps that we laid out for our client to save the $26,000. Not only that, our client now, she has peace of mind knowing that, you know, she doesn't have that entire balance, that entire pressure. With a little bit more income, she's looking at, you know, buying a house, starting a business. It's almost, she has a completely fresh start to do whatever she wants. If you did like this video, remember to click like and don't forget to subscribe because we have plenty more tax relief videos coming your way. Thanks for watching.